Hey guys, welcome back. So in this short video, I'm going to talk about top trading tips. This is just a broad selection of tips that, I've either picked up from people throughout my career or I've come up with myself and I find them really, really useful. Look at them, take them, use them for yourself, tweak them a little bit, discard them, take the ones you like, discard the ones you don't, kind of work with it however you want. It's all about trading is very, very personal. So, it's all good. Right, my first number one tip is this. Let me put the pen here, is keep your charts as clean as possible. Oops. If I can reach that, keep your charts as clean as possible. What do I mean by that? I basically mean that, hey, if you clutter your charts up with loads of indicators, with loads of different tools, with loads of different things on there, you're not going to be able to see the wood from the trees. You're not going to be able to assess price for its true nature. You're not going to be able to say, hey, you know what? That looks like a good buy because, we've pushed to lows, we've pushed back up now, we're holding at highs, volume's good. If you've got an MACD on there, moving averages, 3 or 4 moving averages, a stochastic, an RSI, all those kind of things, you're just not going to know whether it's a good trade to take or not. You've got Bollinger Bands, you've got this and that other, so just keep them clean, don't overdo it. Honestly, my way of always approaching indicators was, and I learned the hard way, by the way, guys, I lost a lot of money by doing this the wrong way, in my early years, back in 2001, 2, 3, probably 4, trying to look at an indicator and then choose a setup from that, was when I actually stripped everything off there, got rid of all the indicators, got rid of all that, and then said, okay, price, what do I want to trade? I want to trade this based on price. Now, grab an indicator that helps me guide me for that setup, if that makes sense. So if I'm buying a pullback, even on a swing trading perspective or an intraday perspective, in my example, I would look, okay, well, I want to buy a pullback. How am I going to grade the area where I buy the pullback? Is it an oversold condition? Is it pullback to a moving average? So you kind of then use the indicator as a tool to help you, as opposed to piling all the indicators on and then trying to find a setup based on that. So it's kind of reverse engineering, if that makes sense. So my second tip when we're talking about charts and indicators and tools is to keep current moves in perspective. So what do I mean by that? I basically mean that, hey, you need to watch and see what's going on. If you're looking at 1 minute chart and you see suddenly this thing spike up here, if you're too focused on an intraday chart and you're too looking aggressively at that, then you're not going to see the fact that the prior few days you were kind of in this range. It's a nothing. It may well have been sitting there for the last 2 hours and it may well have exploded out, but you're not going to say, okay, we're not, and no one's in pain, no one's in pressure, no one's hurting, no, it's nothing new. But if you're just zoomed into this area, all of a sudden you think it's the biggest thing in the world, it's the worst thing in the world, or whatever it may be. So, keeping the current move in perspective is such a good thing. And that's the same whether you're swing trading, whether you're day trading, whatever it may be, it makes sense to just be aware of where we are, where the prior day is, the prior week, the rest of the year. It really is more important from a day trading perspective, because you can end up being too zoomed in on your 1 minute or 5 minute and not look at the daily and say, well, listen, in the scheme of things, this isn't that much. Anyway, number 3 I've got. This goes back to keeping your charts as clean as possible. It's indicators are to be used with caution. Okay? Indicators use with caution. What do I mean by that? Similarly to what I was saying before about keeping your charts as clean as possible, be very careful when you use indicators. Now let me explain and give you an example here. Let's put this iPad down for a second. If we have a scenario where the market has been trending, chopping around, and then it explodes up, you are going to immediately get an overbought condition, because over this period of time, the indicators, depending on the length that you're using, if you're using a stochastic or an RSI, are going to have caught up with that and are going to reset their value to that's the new norm. Same if you're using a Bollinger Band, the bands are going to have contracted. A moving average, they're all going to have caught up, so you're going to have them all right up by price. Then when you get an explosion up, all of a sudden the indicators are just pinging off all over the place. You're outside of the upper Bollinger Band, your stochastic's gone overbought, you're way above your 5-period moving average, all hell's broken loose. But in reality, when you look at it and say, well, actually, that's just a couple of days, that's maybe a couple of weeks worth of trade, and that's spiked up on one day. It's one day. I can't make a judgment on one day. This is not a trend of anything particular. Yeah, we've gone overbought, but am I going to sell that just because it's gone overbought for one day? This could be the start of an immense trend. Same with broken out of an upper Bollinger Band. I hope you can see that it's gone a bit up, done a bit small there, but I think you get the idea. You can't then say, well, it's gone out of the upper Bollinger, I'm going to smack that short for back for a mean reversion, because this thing could carry on, and that could be intraday as well. You could have the lunchtime chop period here, comes into the afternoon, a trend develops. You're there thinking, well, it says overbought now, I'm going to sell it, I'm way above my 5-period moving average, I'm going to sell it. So the sort of moral of that story is to say, hey, listen, understand the indicators are there and can be used and can be useful, but be very, very cautious when you use them. Look what price is telling you, look what the conditions are when that indicator fired a potential signal or not, because don't forget, indicators are only giving sort of two inputs, the price and volume. And if price and volume has had an unusual period of quiet or volatility, they're not very good at judging the change in direction. And perhaps that was just a little blip, if that makes sense. So use them with caution. By all means, have them as, I like to use indicators as a filter. Instead of using them as a trigger as such, I like to use them as a filter and say, hey, you know what, I'm only going to trade long when under these conditions, or I'm only going to trade short under these conditions. And that, I think, is a better way of using indicators. I know a lot of people use them very successfully as an actual trigger to take the trade. Fine, but I'm sure that they will have another filter here that perhaps stops them getting caught out by those kind of things. So maybe an ADX or something that allows you to set trend, or some sort of volume tool that says, well, hey, if it fires off immediately after that, then don't take it, because actually, it's just come from a period of very low volatility, low range, and it's kind of skewing the indicator reading out.